Hello, my name is John Tran. Welcome to my presentation on the investment proposal for AT&T and Verizon. Following are the agenda. Thank you for welcome to my presentation. The next slide, I will go through the logistics and housekeeping, followed by a brief history of AT&T and Verizon, and then I will discuss the market conditions and outlook, followed by the graphs showing the trends, financial ratios and analysis. And at the end of the presentation, I would like to recommend which company I think is the best to invest in. Thank you. Welcome again. For those who are interested in asking a question, please raise your hand using the WebEx. All microphones should be muted to avoid any echoes. Here is a slide describing the history of both AT&T and Verizon. AT&T is a former monopoly company created in 1885. AT&T is a well-recognized brand in the world. It has about 257,000 employees. AT&T acquired Time Warner last year for $109 billion and purchased DirecTV for $49 billion in 2016. AT&T has 4 business segments. They include AT&T Communications, Warner Media, AT&T Latin America, and X&R. To the right are a few points describing the history of Verizon Communications. The company was created in 2000 from a few regional Bell operating companies, and later on the companies combined into one entity and it became Verizon Communications. So it was created in 2000. It has about 140,000 employees. It acquired Vodafone, a wireless company, for $130 billion in 2014. It purchased the Yahoo Internet division for $5 billion in 2016. Verizon has 3 business segments: Verizon Wireless, Verizon Wireline, and Verizon Media. Regarding the business segments for the 2 companies, AT&T and Verizon, AT&T's first division is called AT&T Communications. It includes the mobility business, the wireline business, and the media business. Of those 3 businesses, the mobility is the business that generates the most revenue for AT&T. In fact, it accounts for 42% of the $170,000 million that AT&T generates every year. The next division is called Warner Media. This division is responsible for media streaming and content programming. And the next division is called X&R, and it is responsible mainly for developing advertising business or services and platform. And the 4th division is called AT&T Latin America, where it operates out of Latin America. Just to go back to the AT&T division, where it accounts for approximately half of AT&T's generated total revenue. So the mobility business is the business that generates the most revenue for AT&T. And I will use the mobility business to compare with the Verizon Wireless later on. On the right-hand side, Verizon, three business segments of Verizon Wireless, Verizon Wireline, and Verizon Media, where it's responsible for media streaming and advertising. I hope that the other two divisions are self-explanatory. They are Verizon Wireless, where it accounts for 69% of Verizon's overall total revenue of $130 million. And the Verizon Wireline combines the internet broadband services and the legacy networks. Both companies currently experience a slowdown or declining revenue in their legacy networks, where the networks are composed of coaxial and copper cables. Following are the market conditions and outlook. The telecommunication sector of the communication industry is very regulated. It is very hard for new entrants, new companies to enter the market. Companies have to apply to the FCC, and most of what they do are regulated and monitored by the FCC. So the telecommunication industry is very well regulated. Currently, the most revenue generated business is the wireless division for both AT&T and Verizon. Right now, the main focus for all the carrier companies are to deploy the latest and greatest next generation network, which is known as the 5G wireless network, where it enables for vast amount of data to traverse through wireless at a very fast speed. And also, the two companies are experiencing a revenue decline in their legacy networks, as I mentioned earlier. Also, the companies are experiencing price pressure as the result of intense competition due to capital spent on network upgrades and network renewal. This next slide describes the proportion revenue generated by the four divisions for AT&T and the three divisions for Verizon. As you see on the left-hand side, AT&T Communication Division accounts for 84% of AT&T's overall total revenue. And in that division, mobility is the business that generates the most revenue for AT&T. Mobility is known as wireless also. To the right-hand side, as you can see, the wireless division for Verizon accounts for 69% of Verizon's overall total revenue. In this next chart, as you can see, the chart describes the mobility and wireless business for both AT&T and Verizon. In this chart, it shows that the business is growing for Verizon, and for some strange reason, the business is declining for AT&T. And I should look at that a little closer to determine why. And the bottom chart shows that AT&T has a higher number of wireless subscribers than Verizon does. So upon further investigation, I realized that Verizon wireless revenue includes both services and equipment, whereas AT&T only includes the services. So what I did was, for Verizon, I extracted just the revenue for services for the wireless division, and I came up with a chart at the bottom right, which you can see now the revenue is fairly comparable to that of AT&T. In fact, AT&T is doing much better in the wireless division as a result of a high number in subscribers, as you can see in the chart. This next chart shows the consolidated revenue for the two companies for the 6 months ending in 2019 and 2018. As you can see, the revenue continues to grow for both companies from 2018 to 2019. For Verizon, it's slightly growth from 63,000 million to 64,000 million, and for AT&T, it's about 77,000 millions to 90,000 million. This is partly due to the acquisition of the Time Warner company. This next slide shows the next business segment for both AT&T and Verizon, which is the wireline business. As you can see, and it's expected, the revenue is on a decline for this particular business segment, where customers are migrating their services from the legacy networks to the next generation network. Here, the charts on this graph describes the media business for both AT&T and Verizon. Verizon has about $10,000 million reported for its media business, whereas for AT&T, under the Warner Media umbrella, it has about $18,000 million generated in media business. In addition to that, AT&T also has two other divisions which also are in the same business, in advertising and in media streaming, the entertainment group and the AT&T X&R advertising. This chart seems to show that AT&T has overlapped media businesses. At the same time, they are much larger than Verizon's media business. The only question now is, what does AT&T plan to do with this overlapping media business after they have acquired Time Warner? And this is one of the major considerations when I recommend which company to buy. The next graph shows the operating cash flow to current liability ratio. The ratio shows that both companies are under 1.0 point. Both companies are comparable to each other. This ratio should be at least 1 or above, indicating that the company can meet its current liabilities. The next slide shows the operating cash flow to capital expenditure ratio. Here it shows that both companies' number are far beyond 1. For AT&T is about 2, and for Verizon is about 1.6. indicating that they have excess cash after capital spending and investment to meet outstanding long-term debt. Here in this slide shows the net operating profit margin, where the number again is comparable between the two peers. Here, the chart shows the financial leverage between the two companies. It shows here that Verizon is about 6 times the number of AT&T. By looking at the equation where total liabilities is divided by stockholders' equity, this would seem to suggest that Verizon has opportunities to offer stocks to generate capitals where it needed, perhaps to pay off some of the long-term debts that it had acquired for the purchase of Vodafone. Here, this chart shows the profit margin and the return on equity. The profit margin for both companies showing they are comparable as they are competitors in the industry. However, for the return on equity, it shows that Verizon is about 5 times better on the return on equity than AT&T. Again, perhaps it might be due to the amount of equities they have in the balance sheet. Here in the next chart shows the net operating assets and the net operating assets turnover. The first chart showing the net operating asset showing that AT&T has a lot more operating asset than Verizon. It's not a surprise here because AT&T is a much larger company than AT&T. It's about 10 times the size of Verizon. And the net operating asset turnover, both companies have the same ratio pretty much.